Good evening. Welcome to the Tom Style Show. Thank you so much for joining us. Today we have a quick react video. We're gonna quickly react to the SBF interview that Andrew Sorkin did with him. A lot of people talking about it. It's a viral news. This is interesting. You know, the whole interview, nobody expected SBF to be going on interviews, going on the media. He's on a media tour now. Everybody's super upset, super mad at him, and but you know he's going with Andrew Sorkin. He also went for another interview with Good Morning America with George Stephanopoulos, and I think that one would be more interesting. I don't know because that one I think George was pushing him pretty hard on some of the topics. Andrew was pretty gracious. He touched on a few things, and you know he let him speak. Now after the interview, everybody, it kind of feels like people already made up their minds. So the interview did not have a lot of impact other than adding fuel to the fire, whatever their talking point was. Now, I don't know, I do not think it's a good legal strategy to go on media tours and do all that. I don't know how that would end up, but it kind of reminds me that time. I think the after the collapse of Enron, Jeff Skilling, he was really good at speaking. He speaks very clearly and very very well spoken person. So he thought he can get his way through talking, through his words. He can manipulate, not manipulate, but he can convince the jury and he can convince people that he is good. But later on, he said, I think in one of those interviews, he said, I should have kept my mouth shut. Because Andrew Fastow, I think they call Andy Fastow, did not say anything. He just took the fifth, and he got less sentence than Jeff Skilling. So, so from that point of view, it's probably better not to speak a whole lot. Having said that, SBF is very smart, and I'm sure he's getting his parents are professors, so I think he has advice from people that know the legal system well. So going on these interviews now, he didn't say anything that is not expected, or we're blown away by that. How could that happen? And so basically the talking points are very much the same as what we already know. Now after the interview, surprisingly, Bill Ackman tweeted that I gotta find that tweet. Let me find out. Bill Ackman tweeted, "Call me crazy, but I think SBF is telling the truth." Wow, that was something I did not see coming. I was blown away by that. That he would publicly support SBF. Now and it's even Kevin O'Leary. He also lost money and but he also supported Bill Ackman. Now I think with SBF, a lot of people, a lot of the investors, a lot of people that are involved in startups, and a lot of people that are investors in crypto, and they have a soft feeling to some extent about SBF because of his knowledge, because of his background, because of his capability in this industry and the things he has done, things he was trying to do at that time. So they're kind of a little soft, whereas majority of the population is like, oh, he should be going to jail. Why is he doing interview? He should be in prison by now, et cetera, et cetera. And then Andrew started this interview with a letter. Now, my position with the SBF, I'm very neutral on this one. I don't know what would happen to him. I have no legal advice or legal. I have no idea what's going on. But at the same time, I wanna point out that it's very easy to blame him instead of blaming the whole industry, the crypto industry, instead of, but the thing he was doing, I do know some of the other exchanges are doing the exact same thing, and they're still doing that. So I pointed that out a couple of times, and I'm going to point it out again. and this is just on the top of my mind, this crypto guys, what they do, they open an exchange, as simple as that. They have a security, a trading firm that, they have a hedge fund on the side, and they have a media outlet. Binance owns CoinMarketCap. We have DCG, Digital Currency Group, they own the CoinDesk. And then the list goes on. Every single news that you receive about any crypto related stuff is probably coming from one of those media outlets owned by one of these big exchanges. So there's no way to know whether it's totally manipulated, whether it's true, whether it's false. There is absolutely no way to know. You get some news on CoinMarketCap, it should be favorable to Binance to some extent because Binance owns it. You get a news from CoinDesk, of course it should be favorable to some extent to DCG and the 5 other companies that are related to Barry Silbert. So I'm sure FTX probably had some of that. I don't know, and then the news media goes out and they collect the news from these CoinDesk or CoinMarketCap or one of those crypto news outlets and goes out there and gives it to the to the public. So nothing about the crypto I think is that trustworthy. Now, having said that, and that's still going on. And the other thing these exchanges are doing, they all have their own tokens, okay? I explained that many times on my videos, in the last few videos, that there is no reason for these exchanges to issue their own token. There is absolutely no reason for that, and Coinbase actually doesn't do that. That's a good thing. I would say Coinbase, Brian Armstrong, I would give it to him because he hasn't done that, because this tokens issued by these exchanges are completely worthless, or you can just think of it as printing money out of thin air. That's all it is. Now, how do you print money out of thin air if you're running a crypto exchange? So the popular your exchange is, or the popular one of the services that you're providing is, the better market cap or the better value you're going to get for these worthless tokens that your exchange just issued. Or you can partner up with some other currencies and exchanges and crypto tokens, etc., and then use that to prop up the value and then cash out, use that money for your expenses and operating costs, things like that. And that's been going on forever. Now, all of a sudden, the issue with FTX is the commingling of customer funds, right? So that's the major point where I think he will get a prison time for that, because that's absolute no-no. Now, most people are not looking at the entire industry. I do not think this is just very specific to FTX. I do think Coinbase is doing a good job on that. I do not think they commingle. But having said that, the rest of the exchanges, whether it's Binance or Crypto.com or whatever, all these Barry Silbert's, those exchanges, I'm not so sure. There could be some sort of commingling because they all have their own token out, and they are all very in this case for FTX, everybody's Bahamas, Bahamian Authority, blah blah blah, all that stuff going on. But the rest of the other exchanges, they don't even have a headquarter. We are fully decentralized. What do you mean you're fully decentralized? Where do you live? Give me your home address. Then I'm giving you my money, and you're like, we're fully decentralized. What? Even I was trying to find where's the headquarters for Binance. They don't have a headquarters because they're fully decentralized. Where are you going to arrest them if they take your money? They're gone. How are you going to find that? Where are you going to find these people? They're going to be running around in the Bahamas or in tax havens or in the Middle East, and you're never going to find them. That's the issue with these exchanges. The history doesn't repeat, but it does rhyme. And I'm sure today we're talking about FTX, this, that, and this exact thing is going to happen again within the next 10 years in a different context, in a different setting, with a little bit of different flavor to it, a different character than SBF, and it just keeps on going. When the internet came along, the beginning of internet, there used to be these junk currencies. I don't want to use the word currency, these coins or tokens or whatever. There was no blockchain that time. There was no blockchain. It was just internet currency. And you can make investments in some shady companies using those internet currencies and get a lot of profit. And these were all fraud. But many people tried it. Many people lost money. You gotta wire your fund to somebody's bank account in a different country, and from there, it gets deposited to another place. You get some sort of coin, and you can use that coin to make some investments, and you always get tremendous profit, and you can liquidate some of that in the beginning. You get your money, actually, you get some of the profit, but it's always the musical chair. That's the theory these guys go by. Until the music stops, everybody gets rich, and as soon as it stops, then we're the victim. Everybody's a victim, and then you got to find a guy who is who needs to take the blame for it. And in this case, it happens to be SBF, so every blame goes to him. Andrew starts the interview with some guy, his life savings of $2 million. He put it in FTX, and he lost it. I'm like, okay, I do feel sorry for that person, but wait a second, who in the world puts their entire life savings of $2 million in a company run by a 30-year-old in the Bahamas, and in an industry that's extremely speculative, and you may literally lose your $2 million in 2 seconds? Who does that? If you do that, and now you're claiming you're a victim, of course you're a victim, but nobody puts their life savings of $2 million in FTX. That's never happened. There was people don't realize how fragile this market is. All these exchanges today are running because their currency or the tokens they put out has some sort of value to it. Like your Binance BNB is still valued like I think $40 billion. If it goes to zero, forget your money. You're never getting anything back. And the same goes for all these other exchanges. If their currency goes to zero, you're not getting anything. And then your stable coins are going to fall. And these tether corporations, I think the next investigation is going to come after the FTX is the stable coin issuers. All these Tether and USDT, blah, blah, all that. So the stable coins are going to fall, and then the exchange currencies or tokens that I've been talking about for all these time, even Jamaat mentioned that, they're going to fall. At the end, the biggest thing the crypto world still has is Elon Musk. If Elon tweets out tomorrow that all these cryptocurrencies are worthless or something like Warren Buffett says, there goes all of it. Everything will go to zero. Now, you might say, it's periodic, The thing is, even if it goes to zero, someday it's going to gain. People are going to find some sort of new interest. They're going to have new group of celebrities promoting things, and again, it's going to go up, and people are going to fall for it. They're going to put their money, they're going to lose the money, and then they're going to find another guy, and that guy is going to be, okay, SBF 2.0. That's the problem. It is, it's a cycle. You can see it. You can see it way ahead of time. And all these crypto guys their protocol is so much better than the other guy, or they're building so many applications on top of their blockchain protocol, etc., etc. I haven't seen any application or anything useful. You can come up with all kinds of applications unless it's useful. It has no value to me. As a consumer. I'm just talking strictly from a consumer point of view. I'm not talking about, but it could be beneficial if you're thinking in the investment point of view and you buy something. Like there used to be a bunch of coins named after Elon. Like there was one coin like Dogelon MERS, and then there was a couple of those junk coins. I actually literally put money into that, and I whatever, I think I did 50,000. So I put 50,000. The next day it was 20,000. The next day it was $0 in one of those currencies. It was absolutely zero. Now I can say, I'm a victim, but I clearly knew that this is a complete junk. But I was thinking the music is not going to stop immediately. I might have a few more months where it's going to go from 50,000 to a couple 100,000. So it just stopped when I appeared doesn't mean I can say I'm a victim of this. The same thing with these FTX. So many things, so many people are blown away. But another thing about FTX is if you are putting your life savings type of thing, you can use Coinbase pretty easily, or even Robinhood has some crypto in there. Why did you go to FTX? FTX was all about high frequency trading. So you must be a trader. And if you're in the crypto trading world, that's a highly speculative area. And this is an area if you're already in there and now you're in trouble. So you're kind of prepared. I think you have prepared your portfolio that way. That okay, this percent would be highly speculative or highly, I can lose it all. The other thing is a lot of the I'm a little surprised by that. I thought these VCs should do a little more due diligence than they have done. The Sequoia and Paradigm, even BlackRock, Larry Fink put in money into this in FTX, and they all lost money. And they put in 270 million. I think Sequoia put 273 million or something, and then a couple of the other guys put in similar amount of money. There, I'm a bit surprised that they did not do any due diligence, and that kind of tells you people are just obsessed about getting FTX in their portfolio. They used to be obsessed about getting FTX on their portfolio, having Sam Bankman-Fried, then looking at what it is. There was no, governance was extremely terrible. There was no CFO, and you were just writing $200 million checks without looking at any of that. That's surprising to me, and that needs to be looked into. And these hedge funds, or not the hedge funds, the venture capital firms that have given money to Sam Bankman-Fried, I think they should be scrutinized. That why did you write that check? Because if you did not give him that kind of money, he wouldn't be able to get Larry David and Tom Brady and Giselle and all these celebrities and FTX Arena and all kinds of things. He would be just sitting there in his Bahamian apartment, and this whole thing wouldn't have happened. So you guys have some sort of responsibility of emboldening him, making him what he is. So they need to take some sort of responsibility that, they should be doing at least some sort of due diligence before writing big checks.
Alameda Research did have a long position. And the international platform, it's a margin trading platform. It's a derivatives platform. It's a platform where all the clients were, going on, placing something as collateral and using that to put on a position, whether that's a futures position, a spot position, a borrow. And what the exchange was storing was the collateral from all of those positions. Alameda Research was, one of those that put on positions there. And as I try and reconstruct this, over the last month, I have limited access to data, but my view of it, from what I have been able to see, is roughly that basically, look, a year ago, Alameda had, I think, something like 10% leverage, had something like 10 times the assets of the position that it had on. Over the course of the last year, there were a number of market crashes that drove the value of those assets down and the leverage up. I think it was, to my knowledge, still under 2x leverage, as of a month ago. You look at what happened this month, and in a few days, all out, PRS.
So one of the things in this particular video that SBF is mentioning, that for the collapse of Alameda Research. So this is a very good point, because we need to think of it this way. Alameda Research, in the beginning days when Sam Bankman-Fried had an idea, he went to MIT, he went to Jane Street, he was a trader, he had the knowledge of crypto and also the knowledge from the financial industry and the trading firm. So when he came along and he was pitching his idea of trading crypto to venture capitalists, they didn't buy that. So he did not get any investment at that time. So he went ahead and started trading. He opened a company called Alameda Research. And the reason he named it Alameda Research, it sounded like some sort of R&D company instead of a crypto trading firm. And then he started trading. Now, a lot of the trading, and they were making good money. I don't think that was fundamentally something amazing they were doing. It's basically the whole crypto industry started to get bigger and bigger. So a rising tide lifts all boats. A rising tide lifts all boats. So basically, that's how they were able to get bigger, right? Alameda, whatever positions they had when Bitcoin was, if they started in 2019 and Bitcoin was 8,000 or 10,000 or whatever, and then it went up to 60, 70,000, $60,000 in 2020, 2021, of course they would be extremely profitable. So some of those profits start to come in and everybody looked at it like, wow. And since all these assets that were there in Alameda's books that time went up, they thought, okay, we can open an exchange and we can put FTX, and then they opened the exchange for high frequency trading, these derivatives, and all these extremely speculative and difficult financial instruments that were being traded on that FTX International. Now, the thing we have to think about here is Alameda lost tremendous amount of money in 2022. Not just because they had some bad positions, it's because the whole industry shrank, right? So the whole industry back in those days was $3 trillion plus. Now it's probably 800 billion or so. So this tremendous shrinkage, that's part of the reason. So any exchange that was that also had a hedge fund on the side, I don't think they're probably all of them in the same position. And then again and again, the thing I'm mentioning is the FTT token that the exchange issued. So that also went up. So that had a significant market cap. Now that's worth nothing. So the only thing, so Alameda's rise, the first thing we got to think of, okay, so how did it rise? Because they had some of the positions and the asset value significantly increased during the pandemic. With people just jumping into Robinhood and all kinds of places for speculative investments. And then they were able to issue the FTT token. So both these made them significantly wealthier than they actually were. And using that, they were able to get a lot of venture capital money. With the venture capital money, it's just up, 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 up. And then once the money came in, then they got the celebrities, they got the FTX arena, they got all kinds of things, and then everybody had some sort of trust in the system. And this all happened in a very short period of time. So SBF, I'm assuming, was super carried away because one after another, the good things are happening is a virtuous cycle, and boom, when the whole industry collapsed, and he's the first victim of it. That's probably
acquisition for a moment. How much money do you think Alameda, I'd say that they had a lot of FTT, but that Alameda had borrowed from BlockFi at the time of the bailout?
I honestly don't know, but I would have guessed like 100 million, maybe a couple hundred million, but I honestly don't know the answer to that. I wasn't like running on, I wasn't paying detailed attention, but that's my guess.
And were you using FTT and Serum and other things to collateralize the loans at BlockFi, do you think? I mean, this goes to the whole idea of both the value of these things and also whether you were trying to buy BlockFi, in fact, to continue to support effectively Alameda or FTX.
Right. It might be. I would guess it was, but to your point, my guess is that like the amount paid for BlockFi was probably bigger than the amount that Alameda had opened with it. I mean, I don't know that for sure. Again, but I wasn't even looking at what that number was really. But I think that's about right.
I want to go back to the Alameda piece of it for just another moment, if you'd stick with me here. You had told investors and regulators that you were not involved in Alameda decision making, and yet in the case, Alameda invested $1.15 billion in Genesis digital assets without your consultation or approval. That's the question. And my understanding is you also served on the board of Genesis Digital Assets.
So, again, this is so concerning that SBF going around taking his hedge fund Alameda, taking a couple $100 million loan from BlockFi, and then SBF later on buying BlockFi for a few $100 million. The same thing, and then SBF invested invested in Genesis platform.
And so I'm trying to understand how you wouldn't have been involved with Alameda.
So I was somewhat involved with venture investing, and that was done out of a separate entity than any of Alameda's.
You see, this is going to be very difficult for him to come out because he just admitted again that, oh, I was involved in Alameda's venture investing, but I wasn't involved in the trading decision making and things like that. So, and he was, I think, the majority owner of Alameda Research. So it's just ridiculous, So those two entities would be considered together, and basically the money that Alameda took from FTX. So this is legally could be dangerous for him, what he just did in this interview. But the bigger issue is I'm not concerned about his legal problem. That's none of our business. The problem is this whole industry. What I'm seeing is one exchange investing in another exchange, that exchange investing back in this exchange's venture. So they're all together. So it's Alameda. What business Alameda has investing in Robinhood? And so he goes around, invests in Robinhood. He buys BlockFi. He buys Voyager. He does the Genesis, and Genesis has investment here. FTX has investment in Genesis. So all these guys are all together. And the fall of FTX, as soon as we get to know more and more and more and more about this story, the thing is, all the other exchanges are doing the same thing, the same way, wherever they're located, and they're decentralized. They do not have any particular location, so they're running the whole operation out of thin air. They're printing money out of thin air by issuing their own tokens. This is like a ridiculous thing. And people try to okay, traditional finance. Forget traditional finance. This is not even any kind of finance. This is called the money-making finance of it just makes something worthless and put a value to it, and then all of you guys together buy it, and that gives a certain value, and then the common people goes in, puts their money in that so that they think they're gonna get rich, and boom, they lose all their money, and at the end they're the victims. So this, and then you go back oh, you already knew where you were investing, so why should you be too concerned? This whole thing, again and again, my blame is on the whole industry, the way it's done, and people need to look at it holistically, what it is. And stop investing completely, stop encouraging these things, all these, stop this crypto craze once and for all. I think that would be my recommendation. But yeah, that's my. Let's see if there's anything else this guy says.
Are they suggesting this is a good idea for you to be speaking?
No, they're very much not. I mean, the classic advice, right? Don't say anything. Recede into a hole. What happened? And I get the duty. I think at the end, what's going to happen? That's my take on this. SBF is super knowledgeable in this industry, and he knows where all these bodies are buried. So he's going to start helping the regulators to understand the industry better. And they're going to cut him a deal, something like that. He's going to go to prison for some time, and these are white-collar crimes, and there's different countries, different jurisdictions, all these kind of stuff. So basically, he will have some sort of jail time, and then he will come out. He's only 30 years old, so he'll come out in his 40s, and with the knowledge, either he's going to go and help the regulators, help the police to figure out this industry, and he's going to be paid similar to that guy, the Leo DiCaprio did the Catch Me If You Can. That movie, or that he's helping the FBI now, he comes out and he has a whole new idea in his 40s or 50s, and he uses this whole knowledge and builds another company, and people are going to pour money into it. You saw that when I feel so bad when Masaoshi's son from his Vision Fund, he lost $10 billion on WeWork. Nobody cared. They're like, oh, Masa is a billionaire, he lost 10 billion, nobody cares. And, WeWork is right now worth like $2 billion. And then Adam Neumann came out with his new idea, some real estate, I think commercial real estate, and then carbon capture through crypto and stuff like that. And investors poured in a couple of $100 million already. It's crazy. And if you ask, did they do any due diligence? Of course not. Then why should they do any due diligence for FTX? So I think looks like
nobody cares. Everybody just wants to jump in whenever something happens and get their own agenda going. The other thing it reminds me, he has everything. This SBF, he has everything: the character, the background, the way he speaks, the charisma and all that, the plot, the Bahamas, the Carolyn Ellison, and all kinds of things going on there. Everything perfect for a movie. The script writers are probably the happiest people on earth to write this whole movie, and the only thing is Leonardo DiCaprio going to come in and play SBF? That's the only question. Who's going to play SBF? That's all I want to know. I don't care what else happens. Who's going to play SBF? And whichever company releases this movie, it's going to be a super hit. It has everything. It has everything that a perfect movie needs. So, it's good for Hollywood, looks like.
Basically 100 Silicon Valley, top Silicon Valley employees come down here to work for FTX. And, we were trying to incentivize that and to, make sure that they had an easy way to find a comfortable life.
Yeah, the other thing, these guys are bringing up is the real estate that FTX purchased and all these Bahamian properties that SBF and some of those properties owned by his parents and all that. One thing I do understand how demanding these Silicon Valley engineers are, and to convince them to go and work in the Bahamas, that's not super easy. So I'm sure they had to spend quite a bit of money to, lure them into the Bahamian lifestyle and work for FTX. So I don't think the real estate aspect is a huge thing in this particular story. I don't think he's buying properties through shell companies in the Bahamas and trying to profit off that. But that could be a very small portion of his play.
And Paradigm invested in you. But there have now been questions about the fact that you invested in them and whether these were what some people describe in the business round-trip deals. Can you speak to that?
Yes, this is Andrew is so right, and he brought it up in a place filled with investors and filled with people that's a good place. A lot of these deals, I did an entire video talking about the same thing. Chamath Palihapitiya mentioned that in one of his podcasts. And these round-trip deals, I think now they have a name for it, the round-trip deal, where Sequoia or Paradigm, they go around, these venture capital, big-name venture capitals go around and invest in a company hundreds of millions of dollars, and later on, the founder of that company invests back in one of the funding rounds of those venture capital firms. So, that's, I'm sure that's legal to do, the founder can invest, but in this kind of cases, I think that's going to be one of the big legally debatable issue that, the conflict of interest and the other these round trip deals and the participation of SBF. The other component to this SBF situation is, he's doing these round trip deals with venture capital firms. Then he's doing similar deals with a bunch of other crypto exchanges and crypto companies and hedge funds, so that to keep up the FTX token, the FTT token and all that. And then he has a political component to it where he's making donations to political parties and things like that. So this has all the components, and it's so messy. I think my honest opinion is I don't think he went in thinking of defrauding people. He just wanted to build FTX as a big brand and build it up. But he got involved in so many things in so many ways that I don't think it was all over the place. He couldn't figure it out how to move forward in an honest way. I think he lost his way in this process because the problem, I think Michael Novogratz, one of the hedge fund managers, what he was talking about, you don't start out trying to be a bad guy. You just do one small bad thing, and you may, let's say you lose something and you try to get some customer fund to back it up, and then it goes bigger and bigger and bigger and bigger, yeah, until it collapses. So, and then so many other people were involved in this process. So, I can totally see the snowball effect here in this story.
And I know you're an optimist as well. We've talked about that.
Yeah.
But what do you think realistically is your future?
So, what is my future? I don't know.
This is that's the question. I think I answered that. It's going to be very similar to Jeffrey Skilling, or very similar to that Catch Me If You Can, that guy. All right, thank you so much for joining us. We really appreciate it. Please subscribe. That's my reaction to the Andrew Ross Sorkin's interview of SBF from FTX. Thank you very much.